All right. We are talking with Gray Hall with GK Houses right now. Gray, how's it going today?
Good, man. How you doing?
Doing really good. So we got great feedback on the episode from last month. So as just a quick refresher for people out there, who are you and who is GK Houses?
Yeah, so my name's Gray Hall. I'm the Colorado team leader. So GK Houses Property Management Company. Um, we are in 5 different markets, and so I'm over the Colorado. We manage all along the Front Range. We manage single family, small multifamily up to 49 units. Yeah, along the Front Range.
Great. All right. So I know he gave us some great data last month. So how did May end up shaking out for you guys here in the Denver portfolio?
Yeah, May was actually really good. May turned out to be 98% collection, which was actually up 1% year over year. So 2019, May, we collected 97%, and this year we were at 98%. And so pretty excited about that. I mean, that's a pretty good rate at the number of properties that we have collecting 98%. So May,
I am surprised that actually went up. I was not expecting to hear that.
yeah, it's kind of a pleasant surprise, and kind of the trend is, so I'll kind of jump into June. So June right now, as of today, we're at 93% collection. And I was kind of looking at the data, just of what the trend was last month. So I was kind of looking at like a day-by-day delinquency report, and delinquency report just shows any tenant who's delinquent, any tenant who owes us rent money. Rent's going to continue to trickle in. And so I would fully expect kind of by the end of June, us to be in a very similar 97, 90% collected rate.
Okay. And we are recording this on June 5th. And so are most releases structured where rent is due by the 5th?
Correct. Most of it's due by the 3rd. And
By the 3rd? Okay.
Correct. Yeah. So the 3rd, it gets input. And so by the 4th, we should have everything in there. And I was looking at it too. It's most of these tenants, they're just going to either they've got a payment plan that kind of will enact on the 15th. So we've got a lot of tenants who will pay sometime between now and the 15th. But out of all the tenants who are delinquent, only 2 of them did not pay in full last month. So all the tenants who are behind right now, I'm confident they're going to pay. It might just be a timing issue. Today might be their payday, and so we might see rent come in over the weekend. But overall, rent is kind of the fears that we've seen haven't come to fruition yet. And so we'll see what July holds. But so far, May was pretty strong. I expect June to be pretty strong. And we'll see what happens in July.
Okay. And I know you GKs in, I think, 3 other markets.
So we're in 5 other markets.
5 other markets. Wow. How do you have any data like how Denver's comparing to other markets or the national market? Because I see reports from the apartment associations.
Yeah.
Like they're such, they're in a different league than we are.
They are. Single family is a lot different. I don't have the specific numbers, but I know that they're within 1% year over year. So okay. Even in these other markets, that Denver's probably one of our higher rent markets. And so we manage in Nashville, Tennessee, and then Atlanta, Georgia is a very similar. And so they're probably in those same delinquency percentages, but some of the other markets with a little bit lower rents, it's still within kind of when you look at year over year trends, it really hasn't drastically changed too much.
Great.
I mean, that's great when you manage.
Yeah.
Yeah. I mean, that's the one thing that we've got to do for owners is collect rent. So it certainly makes our job easier. It's been cool. I mean, a lot of the tenants, they want to pay rent. And so even with, eviction moratorium and not charging late fees, the majority of tenants are paying and they're doing the right thing and they're holding up their end of the deal. And so that's been pretty cool to see.
What's the feedback or communication been like with the owners? What are they saying to you, or how are they reacting to all this?
I think, it was a lot of initial shock. I think things have this has become the new normal. And I think that now that we've gotten them rent consistently, we pay out on the second Friday. So now that they've seen that coming in consistently, it's not as much concern. A lot of conversations around like lease renewals. And so we're just being aggressive with that. We've actually seen really high lease renewals. So we were at 80% of all of our leases renewed in March, April, and May. And so seeing more tenants stay in there, but we're trying to encourage owners to just keep tenants in there just because there's been a lot of unknowns, in April and March, and just not sure what the leasing world is going to look like. And, leasing world is a lot stronger than any of us probably thought. And so, that's been a lot of the communication with the owners. And so because we paid rent consistently, there hasn't been too many concerns with tenants not paying.
Good. And so with As you're releasing units or leasing new units, are you guys going for a rent bump or just kind of keep things status quo? How are you pricing the rental units?
We're slight rent bump at the
Okay.
beginning, and we're leasing pretty quickly. Haven't really had too many price drops. Maybe, I mean, if the unit's priced correctly, it's going to lease quickly. Demand has been high. I know other property managers are saying that as well. So we're going to try for slight increases, but just trying to put it at the market rate. We're probably not trying to grab the 5%. Probably not trying to go too far above market rent. Whereas maybe you were trying to push the upper end of that, and so there's kind of a range when you're talking about market rents. And so probably just trying to price it where it's going to lease really quickly. Vacancy, it's just we're trying to eliminate concern from our owners' lives because that's why property managers are here. We're trying to make you as the property owner not have to worry about the vacancy. And so if we price it, maybe $50 kind of off that upper echelon of the market rent is kind of how we're approaching it.
Okay. And as far as just other trends, I know last time we talked, you had seen a drop in routine maintenance requests because, like everyone, people just don't want people in their house right now.
Yeah.
Has that trend stayed the same?
It has increased slightly. I don't have as much data as I would like to have on this. So next time we talk, I'll prep some data on maintenance. Increased slightly. We're starting to see. I mean, it's hot here in Colorado, and so a lot of air conditioning stuff, and a lot of the stuff that tenants just you got to get in there, and COVID or not, they want you in there to fix that. It's a lot of the habitability issues. So we've seen a slight uptick. Our guys are definitely busier. We've got in-house technicians at GK, and so they are certainly busier and able to give them their hours and give them work and get stuff fixed for tenants. So slight increase, but I still think that there's a backlog coming. And so we're probably starting to see this as units turn. The turn costs are probably going to be higher if we haven't been in there maybe the past couple of months fixing some stuff, and not drastically, but maybe stuff that just hasn't been reported. And you hope tenants are still reporting leaks, and you hope tenants are going to report stuff that is damaging the property. And I just kind of feel like we're coming out of a little bit of, we kind of know more about the disease, and some of the regulations have kind of been, or restrictions have been lifted. And so it's been easier to get into tenants' houses.
Great. What other trends are you noticing right now?
Leasing's really strong. Our showings per house have doubled since the beginning of May. And so just kind of steady increase there. Same story with applications. Properties, they're moving fast. We're still seeing people move out of state. We still are not showing our occupied properties. So trying to either have photos, Matterports, or video walkthroughs for those. While we're not showing them, we are still leasing a lot of them. So signing set and seeing addendums. And so, our leasing team, I'm really glad we had an end of the month. Because,
sorry, what's a sight unseen addendum?
Sorry. So anytime you lease a property without the tenant seeing it, there's risks of them going in there and a difference in expectation from the pictures and the condition. And so it basically states that anything that's safety, sanitary, keeping the unit secure, we're going to fix. But if the tenant goes in there and the paint is one shade off, we're not going to be held liable to kind of fix that. So it's kind of setting the expectation for the tenant that, hey, you either weren't able to see the property or chose not to. And so it's just an addendum that we have that kind of helps set expectations for when somebody leases without seeing it.
That makes sense. Great. And you were about to say something else before I cut you off on that. What were what you're rolling?
I don't know. I lost train of thought, so we'll just we'll keep moving on.
All right. And so as far as I know you guys have a mix of a lot of single family stuff and then some smaller multis, sub 30, 40, 50 units. Are you seeing any differences as far as interest or demand in single families versus apartments?
I don't know. That's a good question. I'll have to dig into that. That's kind of the story you heard that might come out of this is a greater demand for single family because of the space needing. Nothing glaringly obvious. I could probably look into the data and maybe find something, but it hasn't been an overwhelming shift where our leasing team is saying nobody's wanting apartments and everybody's wanting single family. So we'll see if that story comes true, and it probably is going to be a lot smaller of increase in interest in there. Everything we have, if it's priced right, it's going to lease because people just have different needs, kind of COVID or not, where they're wanting to live. If they want to maintain a yard, I mean, a lot of people don't want to do that. And so I think there's still a lot of pros for people living in apartments and condos.
So no great migration as of yet out of apartments into there.
No, I haven't really seen that. I'd be interested to hear what other management companies are seeing. But we haven't really felt the great migration to the suburbs and single family homes.
And do you have anyone that you're dealing with, evictions or that need to be evicted when things come up, or have you any tenants just, move out and leave the keys on the counter and say, hey, I can't pay, I'm out?
We've only had two tenants who basically have stonewalled us and haven't done anything. We've had a handful of tenants move out, but it wasn't the situation of, hey, we moved out, here are the keys. They've been in communication with us. We kind of gave some timelines. So yeah, I've been pleasantly surprised. Only two tenants just kind of completely neglecting to pay rent and communicate with us. And so thankfully we haven't really had to kind of go down that route. A lot of it's just communication because our hands are tied and our leverage is kind of off the table right now, which it is what it is. And so it's just trying to communicate and keep that line of communication open with the tenants, because it's a tough situation for them if they can't pay and they're having to choose where to pay their money. And so that's kind of been the message to the team is, communicating with the owners, hey, let's do whatever kind of works best for both of us, whether that's a payment plan or you moving out. And so just connecting between the tenants and the owners.
Yeah. So you said you had two people. I mean, it just sounds like they're kind of working the system right now.
Yeah.
But how many properties you guys manage?
About 650.
Okay, so two in the 650. So, I mean, that's 0.03, point.
Yeah, it's
3%.
Less than half a percent.
So yeah, so I mean that's phenomenal.
Yeah, I mean it is. I mean there was a lot of fears of that happening, like just tenants taking advantage of the situation. But for the most part, I think people know that like if you don't pay rent, you might be able to get away from it now, but there's ramifications down the road.
Yeah, you still owe it.
It's not a get out of jail free card. Yeah, so you're still going to owe it. And I think that most people realize that. I feel sorry for the people who don't kind of realize that because you hate to see that kind of affect somebody's rental history or their ability to kind of, their credit and that kind of stuff. But if people choose not to pay rent, there's a kind of the eventual ramifications. But certainly we're helping people out in the meantime. And so we're trying to be as flexible as we can, and as flexible as our owners can with those kind of tenants.
No, this is great because I still talk to a lot of investors who, hey, they're asking, hey, should I buy a property? Should I not? And basically I tell them, hey, as far as like, with the environment, the way prices are still appreciating, the demand, the interest rates, I think it's a great go ahead. I just tell people, hey, you've got that, there's that small chance that you might be the unlucky lottery winner where you get the, one out of whatever hundreds of tenants where they just move in and stop paying rent. So make sure you keep extra cash on hand. So, I mean, you guys are seeing less than 0.5% of that. So that's phenomenal.
Yeah, I mean, it really is. I mean, I probably wouldn't buy a property with tenants in it right now. I did that and luckily it worked out for me, but it can certainly happen. But, if you're placing the right tenants, I mean, that's kind of like the main takeaway here is if you're managing yourself, like really have your application process, nailed down, because we've got people who are telling us that they're still employed, but they've been laid off and they're trying to hide unemployment. And we've got, we've gone to directly verifying employment with every employer. So whether over the phone or an email. So we're not even looking at pay stubs now. We're just going straight to their employer and verifying. So yeah, I mean, if you're buying a property and it's either got a tenant in there, make sure you do your due diligence. And then if you're placing a tenant in there yourself, just make sure.
So let me ask you that. I mean, if someone's buying the property, because, we buy properties, we get, we'll get a rent roll, we'll get a lease. Mm-hmm. Beyond that, like what recommendations can you have out there for landlords that, hey, I'm buying a place with a tenant in there. What else can a researcher look for?
If you're buying it from a management company, getting potentially their credit report whenever they moved in there, the rent roll is great. I mean, if there's no rent roll and there's no lease, those are probably your two best things. But if somebody doesn't have that, that is a red flag right there. Yeah. Because I mean, it happens. People vacancy is painful and vacancy is expensive. And so maybe the tendency is, let me just put somebody in there as quickly as possible and then offload this potential future problem. So looking at their application, looking at how steady their job is, their payment history, and then making sure the lease gives you some options of what you can do if a tenant stops paying.
Okay. Yeah. Awesome. Well, great. This has been great. Any final thoughts or data points you want to share before we wrap up?
No, I think we pretty much covered it. Leasing strong, rent collection strong, and just do your due diligence when you're placing tenants in your home.
Great. All right. Well, we just finished our conversation with Gray Hall of JK Houses. I'll put his contact details in the show notes. Gray, thank you, and we'll see you next month.
Awesome. Thanks, Chris.